grip on global money is slipping. 73% of central banks now admit they're reducing their US dollar exposure. At the same time, gold's share of reserves just hit 24%, its highest in decades. This isn't a rumor. This is structural abandonment of US fiat. Stick around until the end, and you'll see the exact hedge central banks themselves are implementing, plus the one critical mistake investors must avoid. This content is for informational and educational purposes only. It is not financial advice. Viewers should do their own research and consult professionals before making investment decisions. Why does this matter? Because central banks are treating the dollar like a pressure cooker building too much steam. They need a release valve. That valve is gold. As one analyst put it, central banks are not buying gold for short-term gains. They're securing financial sovereignty for the long term. This is a long-term directive, not a trade. Once a system starts rewiring its foundation, there's no going back. The message is clear. The world's most powerful financial actors no longer trust the dollar as their ultimate anchor. In just one quarter, gold reserves jumped from 21% to over 24%. Meanwhile, the US dollar's share dropped below 44%. For the first time since 1996, central banks now hold more gold than treasuries. That is a milestone. Investors must ask, can a reserve system that loses trust at the top possibly remain sustainable? The chain reaction is straightforward. Dollar holdings shrink. Gold allocation rises. Investors follow that trail or get left behind. The takeaway: central banks are abandoning the dollar. They're locking into gold for sovereignty, not speculation. Here's what almost no one is talking about. Poland's purchase of 67 tons this year means one nation's central bank now holds more bullion than the entire European Central Bank. That single data point flips the narrative. This isn't just about diversifying away from treasuries. It's about nations racing to prove sovereignty through gold stockpiles. And the oversight? Most private investors still treat precious metals like a side bet, when in reality, it's becoming the main playbook for institutions themselves. The one critical mistake is ignoring secure allocation. Owning metal without considering where and how it's stored, especially outside US jurisdiction, leaves the strategy incomplete. In future videos, we'll explore whether silver may actually be the overlooked leverage play when gold sets the pace. How are other investors adjusting their allocation in response to this dollar retreat? Share in the comments below. Subscribe for more breakdowns on how systemic shifts in money ripple into precious metals.